Good morning, ARMR Insiders. Welcome to the morning meeting. Thank you all for joining me. Let's dive into how we're going to be trading the market today and what we might do from an investing point of view. So I'm Brett Rosenthal. This is about the ARMR Investing Way, which is how I run my own personal capital, right? We follow three basic steps or stages as we build out our portfolios and protect capital. We build our whiteboard. That's where we do our research. We use algorithms for a risk on, risk off, and I share them with you. These are things we developed over years, and I share that information with you. And then, of course, we use stop losses to protect ourselves. So the object of these conversations is to share with you information that can protect capital and make money, and then help you understand how to use it. That's the purpose of these conversations. So you've got to do your own due diligence. I'm sharing with you what I do personally, so your risk tolerance may be different. But use the ARMR report as a guide to help increase your success managing your own capital. So here we go. I'm going to dive in. Risk posture first. So the risk monitor is still red. We still have I would say it's more of like a neutral gamma market. It's still kind of negative gamma to me, but it's getting more neutral, which is nicer than it's been. How do we use that information? Let's talk day trading first, then we'll talk about investing. So let's dive into the charts. This is the S&P. We're going to get to this is a NASDAQ. We'll get to that in a minute. But I'm going to share with you real quick again yesterday's trading action and what we'll be looking for again today. All right. So market gapped up, rallied up, failed to get above the first Fibonacci extension higher from the opening range high, and that allowed us to put a short on to make money for the move back down to the next gamma level. Now, we never short the S&P. What we do when we see an S&P setup like that is we short the NASDAQ and the small caps, which we did here. And you can see the yellow boxes when we put shorts out. Green boxes are where we covered, okay? So step one, what you want to realize is we don't want to cloud our judgment today just because we made money short yesterday. I generally don't short. I don't want to short. Okay. I like to capture alpha. My favorite trade is weakness in the morning, get long, market grinds higher. That's the best trade, my favorite trade, because it's statistically the trade with the most, the highest probability of success with the lowest risk. But there are times when these short setups occur. And so if we dive in to the ARMR report for a second, you scroll down to the chart diagrams and day trading playbook. Okay, you're going to find inside of there breakdown and discussion of how we put money to work and day trade every day. Okay, it's a playbook for you so you can look to see what's happening today, then what are the plays that the market could possibly do. The theory here is there are just so many expressions of trading behavior that can occur every day. And so if we put the right offense on the field, as soon as we see the defensive layout, we put our offense on the field, we score a touchdown. That's what we're doing with that playbook. So yesterday was a gap up. We go to the gap up section. What does that tell us? We look for X, Y, or Z. We see gap up, rally up in the first half hour that fails at key locations. We get short, right? The trigger to get short is when we go below the VWAP. And that's what happened here on the NASDAQ 100. I'll just blow this up real quick. Okay. So this is simply trading below. We're just trading the gamma levels. You can see these purple dashes are the gamma levels. So you can see we're short up here on that bar as it breaks below the VWAP, black dots, and we're covering right around here, either at the gamma level or when it goes back above here. That's the final exit. Okay. So thoughts on how we're trading today. We're not looking short. We'd rather not be short. We don't have a bias going in just because we made money short yesterday. It does look like gamma is tightening up, leading to next week's options expiration. That typically happens. So the information I'm sharing with you is we're seeing gamma tighten up. The way to use that information is that as we get closer to expiration next Friday, we really need Crazy Ivan setups to get long the market. What's a Crazy Ivan? Market opens, sells off for half an hour, hour and a half, whatever, right to a key location, sets up a bottom. We get long, it grinds higher back towards the VWAP or above the VWAP. Okay, so that's the playbook probably for the next 5 or 6 trading days. Tighter ranges in the whole market means we need movement away from the mean to get a trade on. Okay, so that's what we'll be looking at today. And you're looking at, of course, at the screen right now, all the different indexes we trade: the NASDAQ, the S&P, the small caps, the Dow, and the volatility index. Now, don't forget, this is the last thing I'll share with you of utmost importance. And I said this yesterday, I just want to share it again. The best time to trade for the way I trade, the ARMR report. And so those of you watching us trade as we share our live screen on the ARMR Pro live trading desk, we're looking for setups between 10 o'clock and 11:30. I don't care if it's short or long. That's the time slot where the highest probability setups occur. We put our trades on, we make our money, and we're done for the day. That's what we're trying to do. And so we'll continue to do it. And of course, we'll keep trading Tesla. I'll be honest with you. We did it again yesterday. Here was the original entry on Tesla, on that green bar right there. Booked some profits on that. Then we had another setup here, and it ground higher the rest of the day. So we'll keep watching Tesla. We watch Tesla, the semiconductors, and the cryptocurrency mining space as our lead indicators for the rest of the market. Very often we'll see those things move first, and then the big indexes move second. So it gives us great insight to put trades on and confirmation of what we're looking for. So we get a double bottom setup in the S&P and the NASDAQ, and we see Tesla making new highs on the day. We know that trade's right. We put that trade on. It just increases our success. All right. So now let's move over to investing. What's the investing posture? So the information I want to share with you is that we're still risk monitor red, and nothing has changed that. I've said to you the last couple mornings that in any trend, whether it's an uptrend or a downtrend, you can have a 2-day counter trend move. In this case, we call it a dead cat bounce. The market sold off hard, and then it rallies for a couple days. That's generally a lot of gamma type of flow. You get this pretty aggressive sell-off for 5 days in a row on the S&P. People own puts. They dump their puts, book profit. Market bounces for a couple days. But that's not real institutional support starting a whole new buying spree. Okay. And what we're looking for and what will change the risk monitor is institutional flows of capital starting a new buying spree. Right? We don't see that yet. On the positive side, there is an argument that rotation is happening. So not so much a bear market, but just money keeps rotating. And so, how do we use that information? We're dipping our toe in the water, and we keep building positions in the portfolio. We don't own the indexes. We're not aggressively long, okay? But we're staying with names like Deere and Caterpillar, which are breaking out a nice basis, okay? We're adding some new names, testing the waters to see if this rotation trade can really make us money. As long as the market doesn't collapse, I imagine it will make us money. So we added some Honeywell yesterday. We really want to keep adding to our energy positions. So, we have the pipelines, we have Exxon. We added a small natural gas play to the portfolio in Tellurian. I like the management team a lot, and I like what this company is doing. It's an early stage company. If we really go into a spike in energy prices, I think the stock could be huge, but it's a higher risk, higher reward type of name. So position size is crucial on a name like this. Make sure you don't get over your skis on it, but there's an idea worth doing some research on in this space. So we're going to keep leaning in that direction. We added some shares of Dow Chemical to the portfolio. Okay. So industrials, how do we use the information? We're still risk monitor red. We're not aggressively buying all kinds of different stocks. We're not buying the indexes, but we do see this rotation trade working in the commodity space. And so we'll keep leaning in that direction. Interestingly enough, the move in financials seems like it's rolling over. So, Goldman Sachs looked like a possible setup. It had a kind of ugly day yesterday. Morgan Stanley looked like it was breaking out, and it had a reversal back down yesterday. And JP Morgan can't seem to get out of this pattern, although it's still tight in that base. And I'm thinking about owning it, but the financials, I think the commodity space is more compelling to me. And so that's where we're going to continue to focus. So day 3 is really what matters to me, getting back to this discussion of a 2-day rally. If you look at the S&P here, just to put a finer point on it. Okay. So the S&P had this sell-off right down to the uptrend reversal, and then had one up day. And then yesterday was kind of a sideways day, up a little bit, but kind of a sideways day there. Day 3 is really what matters, and that's today. So should today be really strong and then the close of the week be strong? If we see a weekly candle that's bullish, then we might get some changes in the risk monitor. But until then, we err on the side of protecting capital, and we might take a shot here or there on a more industrial type of name or a commodity name. So let's move over now to precious metals for a second. There is just no way that I can imagine a year where every other commodity goes up and silver and gold don't. I can't imagine it. Okay. So we're going to go look at the charts right now, and you're going to see why we have our full complement now of precious metals in the portfolio. Okay. And don't tell me that they're manipulated and they can't go up. That's just not true. There are huge moves in the metal stocks. Happens all the time. Okay. So that's just someone talking their book who's been frustrated over the last, year or so because this is a downtrend. But there are definite periods of time when the place to be are, gold's gold. I mean, look, don't forget gold right here. All right. This started out January of 2000, no, December. No, January of 2020. And, gold was a skyrocket. Okay. So now we've had a huge consolidation, and we're coming out of that base. We've had a couple of challenges of that base, right? Broke out, broke back down. But now this is what really is compelling to me and why I have the full complement. This is a 3-bar reversal. Okay. Taking out the high right here of this breakdown. All right. So that confirms to me that you had a breakout, you tested, it holds, and now the buyers are in control. That's what that looks like to me. Okay. And the time to own the metals is before they skyrocket. Now, what I love about this chart is what we call this is 3 white soldiers. Okay. So you had the breakdown in silver, and then 1, 2, and 3 at accelerating prices, right? Obviously, if we get above the 50-day, that'll be huge for this group. So guess what? How do we use this information? I need to be long now the metals as close to the stop as possible. I will not chase the metals. They go up again today. That'll be great. I'll be making money. I will not be buying them. I'm done. You want to put the capital to work closest to the stop, then you step away and you see if you're successful. You make your money in the stock market when you buy a stock, not when you sell it. And that's what that means. It means not chasing. It means doing something that's uncomfortable. The more uncomfortable you are with your entry point, the more successful you're going to be. You can't get a more clear 3-bar, 3 white soldier reversal. If you're a candlestick chart analyst, you know what I'm talking about. Okay, 3 white soldiers, one of my favorite reversals. Any follow through today, and these things are going to be out of here, and we're going to want to own them already. So at the ARMR report, we do. We own them already. The low of the 3-bar reversal is the stop, and you just can't mess with your position unless that stop is taken out. I can't tell you how important that is, okay? If you're over your skis, if you have too big of a position and it goes down for a day and you're panicking, you're doing yourself a disservice. Put the position size on that you can stomach and walk away now with the low of that 3-bar reversal as the stop. That's it. I don't know if this is going to pay us this week or if it takes another month of consolidation before it blows out. But as long as it stays above that low, I stay long these stocks. Okay? You can see the same thing happen in GDX. And, in our dividend portfolio, we added shares of Newmont Mining. Okay. Newmont, I don't really have an interest in owning a bunch of big cap metal stocks. It's what I want to do is own the ETF and trade the ETF on a swing basis. That's what I'm doing. Okay. But for the dividend portfolio, Newmont pays 3.8%, and they have a policy of raising their dividend. So my guess is, throughout the whole year, you're going to get more than 3.8% by the time the year's over. And to me, any yield over 4% is money good. So Newmont's got the huge double bottom above the 50 and the 200-day. It's leading GDX. Look at GDX, which is the whole group. The whole group is just now getting above the 50 and is still below the 200. But Newmont is the clear institutional leader, and it pays you 3.8%, probably more by the end of the year, to own the stock. That's a no-brainer to me. So it's in our dividend portfolio. Okay. Last thoughts. 2 targets that are at the top of my whiteboard to add to the portfolio if I'm buying more stocks today. Okay. Boeing's got to be the top name. I just think Boeing is kind of stupid down here. All the bad news is in it. And, let's do something like this. So I don't know. Let's blow this up so we can see it. No, that's not really what I wanted, I guess, but maybe it is. All right. So here's Boeing's run. And this is the downtrend we're going to draw. Right. Okay. When Boeing breaks that downtrend, we're going to all wish we owned the stock. I mean, quite frankly, we could probably own it right here, right in here. And I know it's gapping up this morning. And I wanted to bring that to your attention because it's gapping up this morning on a story that maybe they'll be able to sell some planes into China, in the near future because regulations will be lifted or, not regulations, but the stoppage. So here's what happened. Here's the Boeing story, right? You probably all know it. Major problems with the Dreamliner, all these different issues. Countries wouldn't allow them to sell planes into the country till they, dealt with certain, and for good reason, certain inspections and all these types of things. I think 2022 is the year where all of those countries begin accepting, Boeing planes again. I mean, let's be honest. There's only a couple companies that make these planes, right? Airbus and Boeing, right? So Boeing's going to get their act together and they're going to be allowed to execute their business plan again. And the stock's cheap down here. It's one of those situations to me where I feel like I'm going to look back at the end of 2022 and say, how could I not own Boeing down there? So I'm just looking for the entry point. And truth be told, I've been waiting for this for a while. And it's in this downtrend. So there's no rush. But I can see owning Boeing, quite frankly, today with a low of yesterday. No, a low of 2 days ago is the stop. If I end up buying Boeing today, my stop is going to be right here, back below the 50-day moving average. And I like to try to own these names as close to, I don't want to buy it when it's already blowing out of the downtrend. I want to get it somewhere in here. I almost bought it yesterday, but you can see the close was no good. The market was weak. The close was good. But, there's this story, which is kind of a dubious story. So I want to see how it opens this morning. But, they're going to be able to sell product back into China within, the next month or two is the story. I mean, it's not really a story. That's just like a rumor. But anyway, stock's going to open higher. I want to see how it trades. And if it trades, in a manner that works for me on my trading desk, I'm going to be adding that position with a low of 2 days ago, which is the 50-day moving average is the stop. Okay. I've also got my eye on Intel. And that just looks like a perfect bottoming wedge to me and a breakout of the downtrend. So this is kind of funny. These are 2 old school beat up names with great looking chart patterns breaking out of long-term downtrends with business models that are turning up where all the bad news is already in it. So those are two names at the top of my list. And we're adding these names close to what the stops would be, right? So the stop here would be, the 200-day moving average, not that far away from it. And if they could execute on their turnaround story, you look back at the end of 2022 and say, how did I not own the stock? Okay. So those are a couple thoughts for you. I'm going to wrap up there. We're going to go get the live trading desk started. I'll see all you guys in the live desk at 9:15. We'll start looking at our gamma levels. We'll look at our day trading algorithmic setups to figure out what we're going to be doing this morning. And we'll go from there unless you guys have any quick questions. Positive PPI today. Yeah, I mean, look, I don't really care what any of those government statistics are. They're all a bunch of ridiculous, numbers that get revised higher or lower next month or next week or, a couple days later. So the only thing that matters is the reaction to the news. Actually, I would even take that away, Cecil. I'd say I don't care at all about that news. I'm just looking at the market, how it's behaving. We're in day 3 of the bounce. We'll see how that follows through. If we have a weekly candle, we buy it. And the PPI number's got nothing to do with it. It's just a manipulated number that doesn't make any sense most of the time. And if you go look at, and that's true about the employment number, and I know there's crazy trading that occurs off of these things. There's just algo trading, but it shouldn't have any impact on the decisions that we make. Economic numbers should have no impact on the decisions we make. And that might sound crazy, but number one, the numbers aren't reliable, and number two, they're backward looking, and it should have nothing to do with someone's investing plan. Even economists that are educated as economists and paid lots of money to be economists get economic forecasts wrong constantly. Like they're worse than weathermen. So how could we ever use that information to make a trading or investing decision? We can't. I'm just wondering what the pattern in Dow we're looking at. What's the pattern in Dow that we're looking at? Why did I add Dow? So Dow's 4.8% yield. Dow is in the industrial sector, which is where I want to put capital. All right, it's a chemical company. What we're looking at is a 3-stage setup for the ARMR report. Stage 1 is the big rally attempt. So we see there's a huge rally in here, right? Then stage 2 is the pullback. So strength. I like to buy weakness in the midst of strength. So here's the strength. Here's the weakness. Back to the 200-day, 50-day moving averages. Okay. We break that downtrend. We break above the 250-day. Our stop is clearly going to be right in here, somewhere around the 50-day on this trade, probably. Okay. Although I added to the dividend portfolio. So, my stops on a dividend stock in the dividend part of my portfolio is different than every other way I trade, Andrew. Don't forget that. These dividend names, I only use a weekly stop. So if it violates the stop, I wait till the end of the week to see where it's trading before I make my decision. That means I could be losing a lot more money, but it also means I trade the portfolio less because many names hit the stop, reverse, go back up. I keep collecting the dividend. They go sideways. I look at that portfolio, all of those stocks together at the end of the year, and I say, did my net worth go up at the end of the year while I collected a yield of somewhere around 6%? If it does, I'm a success. There's going to be some positions that I'm losing money on. I get it. But there'll be others, hopefully, that are up significantly. So I look at the whole basket. Like last year, we had Pfizer up 50%. That covered every other possible loss in our dividend portfolio. I mean, we had a huge year last year. And I just started sharing this dividend information for you. So I just created that portfolio in the spreadsheet. And I share it with you guys on the website. But for me personally, and this is why I'm sharing it with you, I had a huge year in my dividend portfolio. I almost didn't trade it at all, except for a couple additions. A couple of names skyrocketed, right? IIPR, Pfizer, Broadcom. These stocks were up huge. I had a couple names that were down, but the net worth in total was up, and I collected a yield of around 6% on the money. That's a win-win. I mean, what I'm trying to do with that portfolio is collect 6% without losing money. I mean, literally at the end of the year, if that portfolio is flat and I've collected 6% in dividends, I've done my job. That's dividend portfolio. It's got nothing to do with trading and aggressive growth or anything like that. So please understand that when I'm building a portfolio of dividends, it's the whole portfolio, and I manage it differently. Okay. And if that's not how you want to run your money, then you might want to avoid that name. All right. All right, guys, I got to split here. It's 9:10. I got to get out of here. Have a great day trading. Stay nimble, right? If you're a trader, don't have preconceived notions. Just trade what you see. All right. I'll see you guys next.